Hi, today I'm joined by Kristy Washington, who's my childhood friend and best friend. She worked with the IRS for over 30 years, and part of that was spent dealing with small business owners. She retired in 2018, but she's going to join me today while we have a very casual conversation that hopefully will help small business owners, whether new or you have an established business, with your record keeping and filing your taxes. If you're new to the channel, I'm Sherry from SherryLouMiller.com. And here on my channel, I discuss the micro principles: mindset, intention, choices, action, and habits, all as a way to create financial flexibility in your budget, which is earning more than you spend and spending intentionally. I'm going to let Kristy introduce herself and we're going to get started.
Good morning or good afternoon. This is Kristy Washington, and I am an ex-IRS employee. I spent 31 years working for Internal Revenue Service in various positions. The last 15 years, I worked with the Small Business Self-Employed Division of Internal Revenue Service. And I retired a few years back. And in the Small Business Self-Employed Division, we actually provided information to tax professionals and small business owners regarding the resources and products that IRS had available for them.
Okay, so let's put a broad disclaimer over here that everything is for informational purposes only. You must contact your own licensed professional.
That is true.
So yes, so we'll start, as we were discussing, we'll start with the broad overview of small business startups. So if somebody was just starting out based on like the seminars and things you used to do, did you guys have a checklist or things you recommend that they do for new business owners as far as what the IRS expectations are or anything like that?
Well, we don't necessarily have a checklist, but what I would recommend to small business owners, startup businesses that we worked with, is that they become familiar with some of the tax laws regarding their industry and then business expenses in and of itself. Most small business owners actually know their business, but they don't know the back office of their business, which is taxes and many other things. And so as a small business owner, a lot of people think that you can just operate your business, and then at the end of the year, you just take all of your receipts to your tax person, and they're just going to magically make it happen and fill out that return. And that is not necessarily the way it happens. You have to help your tax professional, because your tax professional knows taxes, but they may or may not know your business. So right. you need to have some understanding about what is ordinary and necessary expenses for your business and things that you would be eligible to write off, so that you can give them the necessary information that they need in order to actually prepare your taxes. One of the things we used to say is, if you, the old adage about computers, junk in, junk out, you give right. them junk, they're not going to be able to create this wonderful document, tax document for you at the end of the year. So you do need to be familiar with some business expenses. And then the other thing is not only do you need to be familiar, but you also need to be familiar, because even though you go to a tax professional to get your return prepared, ultimately IRS says that you are the person responsible. That's correct. And so even though you paid somebody else to prepare the return for you and they sign the return, it is you as the business owner, as the taxpayer, that IRS is going to look to if there's anything that they see as of concern, for instance. So I'm not saying you have to be a tax professional, but you do need to have some idea about what is an acceptable
you have to
expense.
Know your business.
Right, you have to know your business, and you have to know what is ordinary and necessary for your business. For instance, I was talking to a young lady, and she was telling me something about being able to deduct your clothing. And she was like, as an Uber driver, you can da-da-da-da-da. And I had to stop her and say, no, that's not really the case, because
Uber driver?
Yeah, for Uber driver. I was like,
teachers
no.
and things like that, I know, like they get like supplies, and if you require a uniform for your job.
Exactly. If they require, but she was saying that she was talking to this young man, and he was an Uber driver, and he was telling her how he was writing off 50% of his clothing because, and I was like, no, that's not really correct. I said, and he may be doing it, and he may even got away with it. I said, however, I said, if IRS were to take a look at his return and audit him, that I can tell you, even though I did not work an exam, they're automatically going to deny that. Because why? Uber and other car businesses, other than, some larger businesses like executive limos and stuff like that, they don't require you to have a uniform. So Uber in and of itself, Uber, Lyft, they don't require you to wear a uniform. So no, you cannot write off your Louis Vuitton sweater and your, whatever
your Coogee back in the day, your
Coogee back in the day, because you were Uber or Lyft driver. They may allow you to write off, I've seen some of the Uber drivers actually have name tags and stuff like that, to make people feel more comfortable. Now, those type of things you can write off, but just your clothes, that will be automatic. And so, that's why I say people need to understand what is ordinary and necessary in their business.
Well, that's the thing, like it's industry related. And to me, if you don't know, like I am one of those, like the last few years, I have waited. I'm not doing it this time. I created a spreadsheet. I'm recording my things monthly because it's very time consuming.
It is.
Like, because I run most of my expenses outside of a credit one, if I put it on a credit card, but all my expenses go through one bank account. But even to have to go through those statements is time consuming. And then I still have to do my taxes. I do all that. So last year I was like, oh my God, stop it. But it's just you get caught up, and if I'm really busy, I'm like, I'm going to do that, and the alarm keeps going off on my cell phone, and I'm like, I'll do it next week. And before I know it, 12 months have gone by.
Exactly.
But you still have to do it. But when it's so much different now with the online business, based on in the 90s when I had the vending machine, I just had receipts, because then I had my taxes professionally done. I wasn't doing it. Because they amortized the depreciation, all of that I didn't want to get into. Like I felt like I didn't really know enough, that I probably would have done more harm than good to myself because I didn't know. And that's why you pay somebody to do it. But I just kept all my receipts, like in notes on things that I wasn't sure of. Right. And I'm paying you to figure it out. So this is what happened. How much I paid for it. This is what I'm using it for. Now you figure out if it's a deduction. But I did, like I had one of those accordions per month, and I would just throw everything in there and take that to my accountant.
Well, see, now even though you did your own thing, you are a very organized person, and you put it in an accordion, and you made notes and all of that. I have heard tell of, and I haven't personally experienced.
Here you go.
Right, exactly. That people have brought into their tax professional, a box with just all the receipts from everything that they did, not necessarily what job it was for, when, it just everything, every receipt that they collected for their business, and they just took it into the tax professional, and, they were like, and what do you want me to do with this?
And the other thing you should do is, because, those receipts, whatever that paper is, they print them on.
Exactly. They don't stay like
they don't stay. So I Xerox mine, and I put the original with it, because that starts to fade. Like over time, that ink, they really need to do something, because what is it, 7 years?
Yeah, it is about 7 years. That's the rule of thumb, is 7 years. But depending if it's for an asset that you have, something that you purchase, and for the business, then you need to keep those records for the life of the asset, or until you get rid of that asset. So
that was the thing. I noticed, I think when I moved, like things were starting to fade. So I had to like Xerox everything while it still was legible. And then I just clipped it to the original receipt. So we'll move on to the receivables. So whether you're online, because most of my audience probably are digital products. So but you still have to pay your taxes.
You do. You do have to pay your taxes.
And the thing is, I may have to take this little thing off. Like, I don't know what's going, but anyway, like Belize, because Belize's this video here is talking about the startup, like the things, don't start it like a hobby. If you think it's a business, like start it like a business. So one of the things she kind of touched on briefly was estimates, but you could probably go into, because I like what you said, like just every time you get paid, or if you're paying yourself monthly, do a percentage, just like if it was coming out of your payroll.
Right. Well, from dealing with small business owners for, like I said, the last probably 20 years of my career, and the small business owners, when you first start out, unless you just start out, with the wealth of money, your income flow is not fluent. It just doesn't continue to flow. So until it becomes like that, what I always used to suggest to small business owners is every time that you get paid, that you take a percentage of that and you send that in to the IRS. IRS does not care whether or not you send them money every day, every week, or every quarter. They just want to make sure that when their quarter period is over, and it's not a quarterly payment, so that people think like, okay, April, May, whatever, but it's not really quarterly when it breaks down. But however, when you make your estimated tax payments, they just want to make sure that you have paid in the correct amount for that period. And so what I suggest to small business owners is, every time you get paid, just automatically, until you start, having full cash flow all the time, just send in a payment to Internal Revenue Service. Take a percentage of that and send it in to IRS. And if you are in a state that requires state taxes, send it in to the state, send the portion into the state. And then that way, you don't have to worry about, okay, it's April 15th and I'm supposed to make my first payment, and boom, I don't have any more money on April 15th to make this large sum payment, or, it's now July and I'm doing estimate. So the one way to alleviate that problem is actually to send it in every time you
So what is
get
it on
receivable.
The website? Do they have, because usually when I file my tax returns, because I use TurboTax, it prints out like the little vouchers.
Right.
Right. So does the IRS like have vouchers or something? Because if you're sending it in, you want to make sure it's being credited towards you.
Right. It's a couple ways you can do that. One, you can print off the Form 1040 ES for the current year. And you can, even though the payment says your first payment is April and next is June, that you can just make a copy of that form, put your information in and send it in. If they get one every, week or whatever, they don't care. However, I would suggest that you use the IRS's electronic federal tax payment systems. And it's what, IRS is known for their acronym. So it's called EFTPS. And if you look it up on the website, the EFTPS system, you can actually have them direct debit your account. You can put your information in, and IRS is not going to be just going into your account and taking out randomly. They're going to take it out on the date that you say, or you can actually make an EFTPS payment by phone. And so
they charge, how some people want to charge if you do things over the phone.
They do not charge an additional amount for the phone. However, I will say that EFTPS by phone is probably a little challenging now because of, the staffing. So the best way to do it is to set up an EFTPS account, put in your banking information, and then set up your payments to come out. You know, you can just go into the system on the computer and say debit on this day or same day debit, and they don't charge you anymore. However, they do charge you if you make it by credit card, because the credit card company is going to charge a fee, and IRS
They allow
is
you to
not
pay
going.
taxes with a credit card?
They do, and they do. They allow you to pay your taxes by credit card. I would not suggest, even though they allow it, I would not suggest that that's the best way to do things, because if you're paying by credit card and you're actually not paying that credit card off every month, then you're paying interest on a tax payment. That's just not, the financial person would boo-boo on you. They would be,
Yeah.
that's not a good thing.
Okay, so now, because we kind of covered in the first part about the ordinary expenses directed to your particular industry. So most digital product owners are working from home. So we'll kind of just spend the rest of the time maybe talking more about that, because anybody that's a digital space, they're probably working out of their home, either in a designated place, office space, or not, but more than likely it's a home office.
Right. So what I would say to the small business owner that is working from home, they need to become familiar with the rules to have business use of the home. You need to have a space that is used regularly and exclusively for business use. So you cannot have your home office in a room that your kids also use to play their computer games, or, or
I'll make a note of that about the kids. Go ahead.
Yeah, so it needs to be one of the rules. The first rule, that if you look it up in the publication 334, which is tax information for small business owners, and if you look up business use of the home, it tells you that the space has to be used regularly and exclusively for business. And you can meet clients in that space. You can, do your whatever you need to do for your business in that space, whatever that may be. But the regular and exclusive use is what's important. And the thing for that people also need to know is that there are actually two different methods that are available for the deduction of business use of the home. There's the regular method where you would take a portion of your rent or your mortgage, you take a portion of your light bill, gas, et cetera, those expenses based on the square footage of your home and the square footage of the office, et cetera. And then now they came out what they call a simplified method. And the simplified method doesn't require you to keep as much record keeping as you would under the regular method. So for the simplified method, you take $5 per square foot, and the maximum square footage that is deductible is 300. So
you mean the square footage for the office space?
For the office space, right.
Yeah, because I've done it the other way. Like I had to pull the specs on my house to figure out how big the space was in comparison to the entire square footage of the house. And I had to start keeping all my utility bills, because even though this has always been my office, when I was in corporate America, it wasn't until I went full-time self-employed that I actually started taking those deductions.
Right.
I don't even remember what they amounted to, but it did help, but I don't know.
It does help. But what I want people to realize is that when you get ready to sell that house, if you are the owner of the home or whatever, you are actually taking depreciation on from your, so that needs to your basis is reduced in that home when you get ready to sell it. And a lot of people
for homeowners,
right? So if you either method, either the
that's where you need
method,
a tax attorney.
That is where you need a tax.
Not a tax attorney, but a tax accountant.
Because
the TurboTax, it does walk you through very detailed. I will give them that. But when you start getting into depreciation and all of those type of things, I'm like, yeah, no. Like, I don't want to go that deep into the weeds, because for me, I used to keep up more with the tax laws, and now I don't. So I don't want to start pulling out publications and trying to decipher all that. Like, I don't. And you're right. Like, I had to call the IRS last year, and I held for hours. So
Yes,
I
there is a
know they're running
staffing
really
problem.
behind. Yeah, they're running really behind now. So Lord only knows how long the whole time is now. Because I just put it on speaker and kept doing what I was doing, but it was over 2 hours for
Yes, and
almost.
you can do that when you call IRS. You can call and put them on speaker and hope that they don't give you a courtesy disconnect, as they call it.
Yeah, that's happened too.
Yeah. I mean, you know, staffing everywhere is really
It's
bad.
reduced.
It's reduced, and so IRS, like most major businesses, are having staffing problems. Along with the fact that they were already having staffing problems due to funding. You know, prior to COVID. So after COVID, you know,
Can't use that word.
oh, I'm sorry. So prior to the pandemic. They were having staffing problems prior to the pandemic, and due to funding. And so now, in the market that we're in now, where everybody is understaffed, they don't have as many workers, et cetera, IRS is definitely suffering from some of that. However, I do, now I'm not saying that this is good, bad, or indifferent, but I have heard in the tax professional community, because even though I am currently not practicing, I do keep my CPEs up. And so in the tax professional community, there are businesses out there that, and I'm not sure how they do it, they have gotten space so that they will get your call through to the IRS. So you can call them. Of course, you know, and look, you know,
Wait a minute. During these last 18 months, the people have gotten creative.
Exactly.
Well, what type of businesses?
Exactly.
They
saw a need. They saw a need, and
I'm not knocking them, but there have
I'm
been
not
some
knocking them either.
businesses.
So I don't know if they call in and they hold on, you know, they just hold a reserve us. I don't know how they do it, but the tax professionals are saying, I've heard in some of the seminars that I've attended, that there are businesses out there, so you don't have to wait online. You can call them, and then they will call you back, and they will have IRS on the line. So I'm assuming that what they're doing is that they're calling, they're doing the holding, and then, you know, they just call you back and get you on the line when they're getting ready, when they get the call through. I don't know how it's happening, but
I could really go in the weeds on that, but I'm gonna stay on topic, because that right there. So we'll go into, we did home office deductions, you know, that you can do your utilities. Even if you're not a homeowner, like I did my rent, like you can still do a percentage of your rent, like anything that's associated to operating your home, basically.
Right, exactly.
I think I did my alarm, like, because it like I said, TurboTax prompts you.
Exactly.
And I just, like, I record, I still keep my accordion, so I still have the physical.
Very good.
I do. I still have them, like, you know, if I buy an online course, I print it out, I throw it in there, and, you know, and then I keep a folder inside of my email, because, you know, if you're purchasing things online, you get the auto receipt. So every year I have a year, 2021 business expenses, 2021 income, because like I said, my income's online for digital, and I just drag them in there, which is another time consuming part if you wait until the last minute to do.
So the key is that you really don't want to wait till the last minute.
You don't.
You as a business owner, what you need to do is you need to put yourself on a regular schedule. So be it every week or be it every month. And I know it's hard, you know, you're trying to run your business, and, you know, every week you're trying to sit down and do this. But if you put yourself on a schedule to organize and prioritize your receipts or however your expenses, it makes it so much easier at the end of the year, and that you are not waiting until the week before it's time for you to go to the
it
tax
does.
professional or to prepare your taxes. It just makes it so much easier if you take that time out.
Plus it's fresh in your mind. Like now what I do is, because I created the spreadsheet, which each tab is for a month. Like if I buy something online for purchase, I just record it right then. If I'm buying clip art, for the printables or for the mugs, I just record it right then, because those are smaller and you could easily, if you're in that business, like miss.
Forget about it.
Yeah, you could miss it because they're normally not really large purchases, but they're still part of your business expenses.
Right. And they add up over the period of time.
Or 12 months,
over 12 months, it'll add up significantly. And it, everybody thinks that IRS is all about getting your money. And that really is not the case. IRS wants you to pay. Okay, now, IRS just wants everybody to pay their correct share. They don't want you to pay any more than you're supposed to pay, and they don't want you to pay any less than what you're supposed to pay.
Well, the one thing I'll say, like, when you're a small business owner, you do have the opportunity to write off a lot of things.
You do.
And especially if you know what you're doing. And that's the other reason, like, I couldn't do it long form. I wouldn't even attempt to, because I know there are things sometimes that TurboTax asks that, because I'm not keeping up with all the changes, I don't even know. It's, especially like during this time period where things have changed, like they've revised some of the rules.
Mm-hmm.
And if you don't keep up with all that, you'll do yourself a disservice. But
we'll
move on from, so we did home office. So we'll move into touch on the business card. We're putting a car in your business name, and then the mileage. We'll kind of just do both of those together, because they're related. So
they are related. Yeah. They are related. So I have heard tell that people say, well, I'm going to put this car in my business name and I'm just going to write it off. The answer to that is no way, Jose, does that fly if you are audited.
So especially like right now, because like I said, most people who watch this probably are in the digital product space.
Mm-hmm.
So more than likely, they wouldn't even have the opportunity. That wouldn't even be an option.
Well, I'm not saying that it's not an option, but you have to have business use of the car in order for you to be able to deduct it, which means that you are using that car to the furthest thing. I mean, so you have to use the car to either meet a client or go to a job or even go to a seminar. I mean, and I've heard people say, well, I'm putting those little placards, like, people put those little placards on the side of their car. So they say that they're using the car for advertising. If you're not using it for business use, it doesn't matter that you are advertising.
You can put the signage everywhere.
You can put the signage everywhere. You still have to have business use. And so, yes, you may have gotten away with it. And it's all good until the rabbit gets the gun. Because if IRS were to audit you and they see that you did not have business use of that car, like you were not going to a job, you were not going to meet a client, you were not going to pick up supplies for your business products, you were not going to a seminar, it didn't have anything related to the business, then they're going to deny that. And so once they get what they consider to be a good lead, they can actually start going back further.
For years.
Go back for a few years and look at it. And then if they really find that it's frivolous, not only will they, make you pay the taxes, but then they can fine you for penalties for a frivolous return. And those penalties are expensive. So I would suggest to people that you just be careful what you use. And then for the business use of the car, just like business use of the home, there are two ways that you can take the deduction. You can go with actual expenses, which means that you're depreciating, the portion of the car for business use. You're keeping track of all of your gas that you use for the business. You're, doing your tires, your et cetera, or you can go with the standard mileage rate, which is 56 cents in 2021. It's 56 cents per mile. And again, you need to be keeping.
So if you do the 56 cents per mile, you don't get all the other thing, the maintenance, the
right. Okay. You do not get the maintenance and everything. So if you take the standard mileage deduction, then that's what you're taking, is the standard mileage deduction, as opposed to taking the actual expenses.
Itemized.
And itemizing that. And the good thing about the standard mileage is that even though you may not be getting as much money over the long haul, the record keeping is much simpler.
Much easier. Yeah.
It is. It's a lot easier. And so you do need to keep a log. Unless that car is used 100% for business and you're not using it for any personal use, then you're going to need to show IRS the portion of business percentage use. So how many miles you drove.
Do you get your car note? Like, you get everything? If you're not using, like, the car is parked unless you're doing something for business, you get 100% pretty much for everything, like your car payments, maintenance, all of it?
Well, it's not so much the payment. So what you're doing is your actual expenses are going to be based on what you expend. I mean, if you use it 100% for business, yes, you can write off, but you need to be
records.
You need to keep records, and you need to show that it's 100% for business use. So that you still need to keep a log. So if you started at 10 miles, at your odometer when you bought the car was at 10 miles, and you drove 2,000 miles all for business, then your odometer is going to need to be at 2010 at the end of that year, to show that it's 100% business use. And you're still going to need to show that, on September 21st, I drove to Miss Betsy's.
You still have to make up the 2,000.
You still have to make up the 2,000 miles. You need to show them in the event of an audit what it was used for. I don't know very many small business owners that can
have
actually
a car just for business.
Have a car that is just for business.
Well, and probably, like I said, as a digital product business owner, more than likely it would be like something small. Like when I had my car was because I was doing network marketing, those type of things. Mm-hmm. But like now, what am I running? Because I haven't really, most things related to online are online. Courses are online, like everything is online. And I only wanted to bring it up because, like I said, Felice brought it up too. And I had kind of always heard that too. Like if you put it in the business name, that you could write it off. And that's why people would put a car in the business name. I've never done that, so I really didn't dig too deep into it.
I'm glad you did not.
No, I mean, I would have like I said, TurboTax, they need to give me like a sponsor for this, because I've been using them for forever. And they are very detailed because I always select walk me through it.
Right.
So that they ask me all the questions that I may not think of.
Right.
And so, usually when it came to the car, I would just select whatever it was no. So they would just skip over all those questions because I didn't use it. But in a couple of years ago, I did, because on top of my digital business, I had another business too. And I was using the car to drive different places that were related. And the mileage thing, because for me, it wasn't in my consciousness. So I would, I'd be like, don't forget to write it, because I wasn't used to it. Like I wasn't used to keeping a mileage log, because I imagine if you're doing it all the time, it just becomes automatic.
Well, the thing is, and you would
Plus they have all these apps now too.
They do. They have apps, but a lot of people or people that I've run into, they don't think about those things until it's tax time. And so then they're going back, trying to backtrack to create that log to give to their tax professional or whatever. And so that's why I really would suggest that small business owners, that they become familiar with business expenses, and they do all of that stuff before they actually start to do their business, that they talk to a tax professional. I'm getting ready to start a business. I'm going to be painting homes or whatever. So that tax professional can tell them, well, these are some of the ordinary and necessary business expenses. And if you have business use of the home where you're keeping your records, you're doing your estimates and all of that, then this is what you're going to need when you go from point A to point B to point B to point C. You need to keep records of that, because I was working with a small business owner when I do some consulting. Like I say, I try not to actively do that, but every now and then, because people know me, and because I keep up my CPE credits, people will ask me. And I was working with somebody, and they were 6 months into their business, and they really had not kept a mileage log. And this was a company that was they were doing home paintings. So they were actually going from their business site, because they had a structure where they keep their paints and all of that stuff. They had an office and everything. And they were going out, they were doing estimates. And so they had mileage for the estimates that they did. And then every day that they went to the job site, and then when they went to pick up paint, and they were 6 months in, and they had used their car quite a bit. And they were like, oh, I wrote down, I said, well, you wrote down that you went there, but what's the mileage? I mean, what's the mileage from your office to Sherwin-Williams, or what was your mileage?
In that case, for that, I mean, hindsight is 2020. The app would probably be way better.
Right.
I can't even remember what the app was, but I came across it. And I guess when you set the appointment, like, it will automatically, I guess, keep track. Because when you have a business like that, like you said, you're double dipping. You're going for the estimate and then the actual job if you win the bid.
Right.
So that's I could see that getting pretty tedious. But I mean, it's necessary, but I'm just saying, like, especially in the beginning, because when you're just starting out, it's a lot of moving parts, like when you're just starting a business. So taking on something like that, on top of recording like, if you don't have a bookkeeper, because in the beginning, you're probably not going to have a bookkeeper.
You probably don't have a bookkeeper in the beginning.
QuickBooks, years ago, I tried to use it. My spreadsheet works so much better for me. Like, it just, I mean, it is what it is, but.
Well, that's because you're familiar with Excel, and so you know how to create the spreadsheet. Everybody
I'm self-taught, like, YouTube has a training video on everything.
Again, here's a company that saw a need, or there was somebody that saw a need, and they met that need.
But I think if you're just an average small business owner, I'm not going to say QuickBooks is a steep learning curve, but it's not a simplistic program, I don't think either.
Right.
So in the beginning, you can probably just start with a spreadsheet. You just need something that's keeping track of the things that are going on in your business. But the one thing before we move into resources, because when you said kids, this has been trending on, and I didn't even have it on my list, but I saw it the other day on Facebook a couple of weeks ago, and I saw it last year. I was watching a tax video. I didn't even know this was a thing, but I've seen it about 3 times now in the last year. Okay. That people are hiring their children, and if you can prove that they're working for you and you're paying them, it's some type of deduction, which I was like, what? So we'll just talk, because when you said something about kids, I can't remember what we were talking about, and I said, oh, let me make a note, because I wanted to circle back. because when I saw it a few weeks ago, I go, there's that kid thing again. Like, because in a digital space, you probably could, because that year when my business was exploding, everybody was like, get my daughter to help. Why don't you get your daughter to help, even though she's an adult? But let's just say she was a minor, because these kids are more tech savvy than me
Oh my goodness, yes
nowadays.
they are.
But let's just say she was like, so what's the criteria? You have to prove that they're actually an employee of the business or something?
Right. You, just like anybody else, you would need to show that they're actually doing work for the business, and they would generally be an employee. So then if they
So
are
can you do a 1099 on them, or they have to be a W-2 type employee?
well, I don't want to.
Want to get too detailed? Okay.
Yeah, I don't want to get too
I just was
detailed, but
curious because that just
well, what I will say is that that's really getting into a whole lot about whether or not somebody is an independent contractor and whether or not somebody is an employee. Now, so the general rule is, and this is IRS's rule, if you are controlling the method and the resources that they're using, then generally, and I say that word like IRS would say it, generally that person is an employee.
Because I thought something to do with the time too. If you're very specific.
Right. So when they say that you are controlling the output and the input and the output of that product, that does encompass the time, the hours that they work, the method that they're doing to do the job. If you say, I want this I want this line to start here and go down and not start at the bottom and go up. I mean, so you're controlling everything. If you're doing that, and then that person is generally an employee. If they're an independent contractor, then that person is somebody that you just say, okay, I need this widget made, boom.
And you allow them the flexibility.
And you allow them the flexibility of when to do it, how to do it. They just have to give you back the widget in the manner that you wanted it done. You know what I'm saying? And then they're an independent contractor. So for a child, generally that child is going to require a little bit more instruction. And so they would generally be an employee, which means that you should be doing withholding, and they need to do a W-4, and you need to do the 941.
But you can pay your kids.
You can pay your children to work in your business. You can pay any other family member. You can pay your spouse.
But the video I saw, these children were pretty young. And I think that's what kind of threw me when I initially saw it, because this person was trying to say like all the deductions when you're working from home, like put your kids to work and let them do this and they can come employees and blah, blah, blah. And I'm like, what? And then I saw it again. And then, then I saw it on Facebook a few weeks ago. So I was like, okay, this must be becoming a trend, like, because I had never seen it before that.
Well, during the pandemic, because people were home more and their children were home more, people started utilizing their children. I mean, especially for people that were doing things like making products like soaps and candles, and they were having their kids to do the stirring and do this and do that, and packaging and all of that, because they're at home. I mean, before 2020 happened, your kids were at school for 7.5 hours a day, and then if they were above the age of 7 or 8, they were probably in an after-school program doing something. And so, your kids were leaving at 7 in the morning and coming back home at 7 at night, then they had to do homework. So, but in the environment that 2020 put us in, they weren't at school for 7.5 hours a day, because most online learning was a half day or less. And so when they finished their homework, you weren't sending them outside to play, because guess what? People aren't intermingling. So they could utilize your kids. So it probably became more of a thing in this last year or so, last 18 months or so. Mm-hmm.
Like I said, I just wanted to ask that, because I was like, I could have employed my children.
You could have employed your children, but
They wouldn't. I don't know that they would have made good employees, which would have been. Because I
that's the
tell my
other
kids
thing.
all the time, if you work for me, I would fire you. I have told that one upstairs that more than once. If you worked for me, you'd be terminated by now.
Right,
So,
right.
because because with things like that, I'm big on customer service. So I do want things done a particular way.
Right. And so, but it's a good thing to actually employ your children, because then you can impart some of the things
Work ethic.
the work ethic that you have.
Plus, they could probably open up Roths and things by then, because
they could.
Yeah, because I was talking to somebody about that. I said, well, none of this I've kept up with. Like, when I was in the industry, I kept up on all the regulations, but I haven't recently. But I know back before it was like you had to have earned income. Like that was the criteria. You had to have earned income. So I was like, like for us, well, I don't know how early you started, but I started in those summer programs growing up, like at 12, 13. Who knew I could start investing? Like,
right.
Yeah, I mean, now we're in a different age than we were with our parents, like, because the earlier you start,
the better it is.
Yeah.
And then the thing is that you do want to start your kids off early, and you want to give them a good business ethic. But the main reason you want to start them off in terms of saving towards retirement and saving towards college and all of that is because, and really for retirement, back in the day, companies used to have those defined benefit plans. So, if you worked, you got a pension, like,
right.
Thank goodness for the government. I am.
Yeah, I don't have.
Yeah. So I'm glad that I stayed with them. So I do have a defined benefit plan, but many companies no longer have that. And so all you have is your 401k and whatever that matching is. And so now, unless you, did the 10% like you should have been doing, maxed it out and did whatever. A lot of people are having to work longer because they aren't ready for retirement, because they don't have a defined benefit plan where they're getting X amount of dollars every month. The only thing that they're getting is their 401k and Social Security or whatever. And so if your child starts working at a younger age and they start putting money into a Roth IRA or even a regular IRA, if they have some earned income, then they're starting earlier. And
I just prefer the Roth. It's just not as restrictive to me.
Yeah, Roths are not as restrictive, and it's. I mean, a Roth is a good thing. You can hold it in there 5 years. It's all tax free. We are good.
Yeah, and so and the thing is, like, on well, we won't get up into that too much, but on the traditional, you have at 70 and a half, you got to start taking your money.
Right.
So I was like, even at a Roth, you can still contribute up until, so I just prefer them. Like, to me, it's after tax dollars. They're both after tax dollars. It's just a lot more user friendly to me.
It is. Roths are user friendly. Yeah, I would definitely say that Roths are user friendly, and I do recommend them. And even working for the IRS, I should have, when I had an opportunity to open a Roth and start it, back in the day, I didn't take advantage of that until like the very end, and now I'm kicking myself. I'm like, man, I could have had some more money, but.
Well, hindsight will always kill. That's why you got to quit looking in the rearview mirror.
Yeah, and look forward and know that regardless to what I didn't do in the past, that if I'm making the right decisions now, it's gonna still come to me.
It'll still come.
Get it.
So we'll wrap up with the few resources. So is it anything really? Because like we talked about, probably state and federal agencies are pretty tapped right now. So outside of SCORE, because who funds SCORE? Is that?
So SCORE is partially funded by the Small Business Administration, but SCORE, which is, I think it stands for Senior Corporate. I don't
remember.
So anyway, they're business executives or ex-business executives.
Oh yeah.
that, and so they offer consulting services
They
for
offer
small
a
business
lot. They
owners.
do.
They offer a lot. So SCORE is still out there, and there are still other nonprofit organizations that have small business incubators that you can attend to get your business started. It's there. So where it used to be, I would have said, go to the IRS website and look up small business tax workshops, and they have all 50 states listed. Those things don't exist anymore because of staffing, and the state does some things, I know, in the state of Michigan, and but I can't say every state, but in the state of Michigan, they still do some small business education, but it's really around the collecting of use tax and business taxes. So I've heard that the state of Michigan still has that, and I'm not sure about the other states that are out there, but there are still nonprofit organizations that have small business incubators. And so you can probably Google that information, a small business incubator, and find out what's out there. Look at organizations, some of the colleges, community colleges, those type of places, and that you can go and find out information. A lot of these nonprofit organizations, like if you see these pop-up shops, they are normally connected to an organization that is affiliated. And so those are the places that you need to get your resources from in terms of, face-to-face help. If you are a person that reads, and the old saying, reading is fundamental, IRS has a plethora of information on irs.gov. Which is their official website. It is irs.gov, not irs.com. It is irs.gov. And you can go on that site. Again, one of the publications that I recommend for small business owners is the publication 334, which is tax information for small businesses. They have a publication 535, which is business expenses. They have a publication, and I don't know it by name, but they actually have a publication that is strictly on car and truck expenses for small business owners. And so that information is out there. Now, IRS's website, sometimes their search engine is not as user-friendly as I would like it to be, even when I was an employee. So
to me, if you Google it, like
that's what I was going to say, Google is your friend. So if you go to Google and put IRS, it's going to take you to it's going to bring you up the link for the IRS website with whatever publication you were looking for. So I would say use Google and to get, to work through the IRS website. And they have tons of information. You can download the publications online, which is probably the easiest thing to do. And you don't have to print out the whole thing, just print out the few pages,
the section you need,
the section that you need at that time. Or, or if you're old school and you don't mind waiting, what used to be 10 to 14 days is now 21 to 30 days. If you don't mind waiting to get the publication in the mail, IRS will still send out in mail to you some of the publications. Now, the larger publications like the publication 334 and the publication 17, which is tax information for individuals, they no longer hard print those because those are thicker publications, and so they don't print those. So those two you will have to go and download yourself.
Okay, well, I think we're going to wrap up there.
Okay.
And that was a lot of information.
Wow. Well, it was fun delivering it.
It was. So we may have, because I was thinking about bringing back next month, somebody's coming on to do business plans. So I thought about having a panel because when you're starting a business, you really do need a business plan, whether it's traditional, you still need to have some idea how the things that you're going to do. whether you get as formal with your mission statement and all those like old school things, but you do still need to have some type of roadmap. You know, I'm a planner, so
Right. Well, you need to
I
have a
don't do it
road. You
old
need to
school
have a
anymore.
roadmap,
Yeah.
because if you don't know where you're going, I mean, you know,
Well, you have to know where you're
and you don't have
starting and where you're
where you're
going.
starting and where you're going. You have to know those things. You got to know. And the thing is that for a business plan, if you ever decide that you want to get some funding, you want to expand your business, you want to apply for grants, and all of those things, they're going to ask you for a business plan, because you need to have that information. So writing a business plan, like I say, you may not have to go far as the vision and the mission statement and all of that, but you definitely need to say, this is where I'm starting, this is what my goal is, and the steps that you plan to get there. And it's good to help you kind of check off where you are.
Well, it helps you to, like, you know, because depending on, I was talking to the landscaper that came today, because he was an independent. And it's like, you need to know the vision for your company. Like for me, I only want to scale it so large because I don't want employees. So I don't need something that's going to blow up where I'm going to need 20, 25 people to keep it going. Like at this stage of my career, life, whatever, I don't want to be bothered with all that. But I do like the direction now, the YouTube channel, the digital products, and it's manageable just for me.
Right.
I mean, you know, I needed to scale a little bit more, but I don't need it to blow up.
Right.
And so, you know, and I have a plan, like, you know, how am I going to get there? What do I need to do to make it sustainable? How am I going to maintain it? And how long do I want to do this? Because even as a self-employed person, I'm not planning on working the rest of my life. I mean, you know, like it's definitely better because it's more flexible, but you know, you still want to be able to go out and at some point in your life, for me at least, not be working at all, not to have any type of get up in the morning and have to do anything
that you have to do. If you you know,
passive income is one thing, because that's another part of my business plan. I have a section under their passive income, and then what am I going to use? Affiliate marketing, some things that I sell on Etsy, they just sell automatic. They don't require me to be involved with that. So, you know, all of that, I have the digital product, you know, YouTube is a part of my business plan. So all of that. So you need to have a vision for your company. How you write it down, to me, it doesn't have to be as structured as a traditional business plan, but you need to be able to project out your revenue and things like that. So, you know, we won't get too detailed. We'll wrap it up here.
Okay. And I do want to say one more thing though. There are organizations out there. I had a friend of mine attended a class. I guess it was put on by Goldman Sachs. They do some things for small business owners, and so she attended this this class, and they require you to write out your plan and do all of that stuff. And anyway, as a result of that, she actually of her attending this class and doing the work, it helped her with her networking, and she was able to get a scholarship to hire employees, because you know, she in her interior design business, she had picked up so much business that she needed to be hiring somebody, but you know, she really, you know, she was like, oh, I don't know how to do this, blah 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 blah. But she had, you know, in the whole scheme of attending this course, which was online, she met somebody who introduced her to somebody, and they helped her go through that process, and then the person turned her on to some organization that was out there helping with women businesses go to the next level. And they were providing scholarships, well, what I consider to be a scholarship, I guess it was a grant of some type for her to hire. So she was able to hire somebody, and they matched, you know, so she didn't have to pay that person totally out of her pocket, you know.
And there are a lot of things.
There are a lot of things
now,
out there.
especially now in this time. I think some of the organizations that people overlooked in the past, like are getting more attention. So you have like BNI allows you to network, Chamber of Commerce allows you to meet and network. And I think Chamber of Commerce actually keeps a directory. So people can go online. And then if you go to SCORE, like I said, I use SCORE when I had my vending business. They'll connect you with other organizations. So you just have to, and I'm still on a few email lists from when I was in Michigan. I think it's Michigan Small Business, and then now Nevada. So there are things out there. It's just now for me on the digital side, most of that doesn't apply to the things that I'm doing now. Before I had the network marketing or the vending machines, it was different rules, regulations that I had to do. But even on the digital space, there's still rules. I mean, there's still things you have to do, because even on the print on demand side this time, this is the first holiday season that I'm not selling outside of the United States, because over the summer they changed all of these rules. If you had so much revenue in the EU, there's all these different requirements. And I don't want to start messing around in somebody else's government. Like, but I'm just saying,
one government is enough.
yeah, it's one enough. And like, who maintains that and who collects it and who's sending it? It's too many moving parts for me. Now, if that's what you want to do, because I'm sure, because I do have, before I stopped selling, I did have quite a bit of international sales. And it's not everywhere. Like, anybody interested will have to look it up. But there were certain areas of the EU, and I'm like, yeah, no, I don't want to do that. And so, because that's just another piece of the puzzle, like who collects it, who sends it into that tax organization, and that's one more thing, one more layer to your business. So if you want to do that, you have to keep up, and then you're going to have to keep up with those rules and regulations. And for me, I was just like, not right now. Now,
and then you have to look at foreign tax credits. So if you are starting to do that, IRS does allow you, and this is moving to another subject, but
see, it wasn't the taxes. It's like it was if you had so much revenue, it had something to do not with the local government. It was over there. Like you had to start submitting something. If you exceeded, I can't even remember what the threshold was, but if you exceeded that, like their requirements changed. It was like July of August this year, it went into effect. And at a certain level, different platforms collected. But after then I was just like, I looked into it, but for me, like I said, it was too many moving parts, and I have enough on my plate. I'm a solopreneur. That was just an added layer that I didn't want to take on. Like I said, I may later, but right now, no. I may add it back, because like I said, I didn't go back to see historically how much of my business was, but I did have quite a bit during the fourth quarter. I get quite a bit of international sales.
Right.
And I still do.
You may want to take a look at that. And again, if you decide to do that, you also want it, and you don't want to prepare your own taxes. IRS actually has something on their website about how to choose a tax professional. You just don't want to go to any Joe that hangs up a sign.
You're still at the tax level. This has to be, it's almost like, how at a state level, you have to submit sales tax. Like I have my business. So it's similar to that.
It's equivalent to a sales tax. A business, a use tax, or whatever they call it, right? So I'm just saying that if you even in doing that, if you want you need to have a tax professional that is familiar. If you don't want to learn those rules yourself, then you can always go. There are tax professionals that are out there that will help you with that. I mean, accountants, tax professionals that do bookkeeping, that are familiar with those rules. As now things are much more global than they used to be. There are tax professionals out there that are familiar with that. So that's what I'm saying. So you can go on the IRS website, and it'll give you those things that questions you want to ask, things you want to know before you choose the professional to help you with that, is what I'm saying.
And I figured that I probably, but this will be the first season that I'm not doing it. But next year, when things are a little calmer,
Hopefully.
well, not even, just with,
Yeah, just with
everything that's
life in
going,
general, things are,
life in general, like I didn't need another layer. So I just was like, okay, the printables and everything. And I've gone, I have other things that are in the works
Mhm.
that may or may not replace that. Only time will tell. But we'll wrap up here. Let me stop the video. Well, I found that discussion very informative. So I think the moral of the story is to treat your business like a business and not a hobby. Get consistent with your record keeping. File your estimated taxes if that's required for your business at a federal or state level, and familiarize yourself with what type of deductions are allowed for your business, because it's not a one size fits all. Like, there are different things for different industries. The example that Kristy gave was an Uber driver. There's no required uniform for that, so writing off a clothing allowance isn't allowed according to the IRS. Whereas someone who's a delivery person or something that has to pay for their uniform, that's a different scenario. So just, if you're in a digital planning business, what type of things can you write off? I work from home, so as we discussed in the video, I have a designated office space. All I use this for is my business. I don't do anything else in this space other than operate my business. So I have allowable deductions. So these are just things. I will link the publications that she mentioned throughout the video in the description below, in addition to a link to SCORE, that if you're starting out or you're an established business, is always evolving. It's work in progress. So just keep up with the things that you need to keep up with to keep your business and your financials of your business healthy and operating according to the IRS code. If you found value in this video, give it a thumbs up. Kristy she's not an active consultant, so there are no links to keep in contact with her online. But I may bring her back. I'm thinking about bringing back I'm thinking about bringing her back and a couple of other people for a panel discussion just to help small business owners. Because on this channel, my goal is to help people to earn additional income so that they earn more than they spend. And whether you're doing a side hustle or full-time online business or a brick and mortar business, these things still apply. Business plans, startup costs of a business, all these things, they're variations of them, but they still apply to running, owning, and operating a business. So don't forget, if you haven't, to subscribe to the channel and hit the notification bell so that you're notified the next time I create a video. Have a good day, and I'll see you in the next video.